Hello again, fellow BeachBum traders, and welcome to part one of our weekly trading game plan for the trading week of October 17th through October 21st, titled Goodbye Tina. Tina stands for the acronym There Is No Alternative, and I don't know offhand who coined this term Tina originally or when, but again, the term Tina has been used particularly in 2020 and 2021 as there was no real alternative to stocks. So you saw most of the cash flow into stocks, go into growth stocks, etc. And a lot of that is attributable to the run up in stocks because there was no alternative. Interest rates was near zero. Bonds was paying at most about 2%. Real estate wasn't really appreciating significantly. So again, there was no alternative. If you wanted to get any kind of real return for your cash, everyone put it in stock. So in 2020, 2021, they also turned the term stonks and they said stonks only go up. Well, we've learned in 2020 that stocks also go down. And hopefully we're learning strategies on how we can make money when stocks go down. And now we're talking about alternatives for how can we make money when there are alternatives to stock and we see cash outflow from the equity market to other markets like the bond market, etc. So stick around, and at the end of the video, we'll talk about our strategies for how are we going to deal with the fact that now there is an alternative to stocks. We have to say goodbye to Tina, and we have to come up with strategies to make money in the markets when there is an alternative. And again, we'll talk about next week probably the new term TARA, which is there are reasonable alternatives to stocks. Good morning to everyone joining us in the live chat. Walter Lyons, Spacula, good morning. Judy Tubman, good morning. Thank you for joining us. Flip of the Shippa, glad to see you all. Thank you again for joining us for the live stream of this part one of our weekly trading game plan for the week of October 17th through October 21st. So we'll get started. So here's our Google Documents with our notes for our weekly trading game plans, and you should be able to find the direct link to this Google document in the description box below. It is also found in a public Google Drive folder that you can access both the game plan notes for this week as well as many of our previous weeks. So again, if you want to refer back to our notes for this week or previous weeks, and it contains links to many of the tools and references that we use in our weekly trading game plans. So again, goodbye, Tina. It's no longer true that there's no alternatives to stocks. Now there all are alternatives to stocks. And we'll talk about what does that all mean and how, again, can we make money trading, given that there are now alternatives, reasonable alternatives to just stocks. So we'll look at how the market ended up on Friday. It was pretty bloody on Friday. Thursday was kind of crazy with the CPI data, etc. And we'll look at that when we look at the futures and the indices. But we see, pretty much all the markets were down on Friday. More decliners, more new lows, more below their 50-day week. 50-day moving average. Now we've got 84% below their 50-day and 83% below their 200-day. So, very bearish signals. We're still in a bear market. We've been saying this all year. So, and we've come up with strategies, of how to make money trading in a bear market, or any kind of market. And that's one of our primary messages on our channel is you can make money trading in any kind of market, and we're here to hopefully help you do so. So, we see everything was pretty much red. JP Morgan had positive earnings, so Wells Fargo. So a couple of the financials, but otherwise pretty much everything was down. See some of the news, not a whole lot right now. I've got some clips from the post-CPI data, also as the employment data as that came out. Good morning, Tanvir. Thank you for joining us. Glad to see you again as well. M. Blink. Thank you for joining us. So we also see oil had made a run up towards 90 on the OPEC cutting production, etc., and then started to decline. Now it's sitting around 85. Natural gas has been hovering between 6 and 7, bounced off of near 7, came back down. Gold, silver, etc., were all uh, impacted seriously by the strong dollar. We've talked about how to trade the strong dollar, how to make money in a market where there's a strong dollar. And again, that strong dollar was pushing down the dollar denominated commodities. We can also see the euro is now at it's below parity again at 0.97. The British pound had recovered a bit. Now it's declined as well, and we see all the treasuries. The 30-year treasury was even touching 4%, but we see it's no longer truly inverted. The short term is up above 4%, and the long duration is around 4%. And again, we're going to talk about, what does that mean when you can get essentially a risk-free return of 4%? What does that mean to stocks and the stocks that we'll want to look at buying? So again, this is part 1 of our weekly trading game plan. Part 2 tomorrow, we'll take all this market analysis, all these strategies, and apply them to individual stocks that we want to put on our watch list for next week. So we hope you'll come back again tomorrow, and we'll talk about individual stocks tomorrow. So let's look at the indices. Start with the SPY. Again, we see that extremely volatile on Thursday around the CPI data. Initially, it plunged, and then they bounced it back up. I can talk about some of the hypotheses of why that occurred. And then on Friday, we saw it dump back down to, almost where it was before the CPI data. So again, kind of crazy volatility on Thursday, pretty boring up until that point. And then Friday was a dump back down to where we were essentially. I'm going to zoom that out to the weekly a little bit. So again, we can see, we're still in a bear market. We made a lower low. So again, this is still a bear market as it's been most of the year, and we should be trading accordingly. We see, kind of thick doji, which is, pretty indecisive. We're well below our moving averages. So again, we're in a bear market, it's declining, and we should trade that accordingly. We're going to see it in all the indices. They're all going to look essentially the same. NASDAQ, same. So the Dow held up considerably better than the other two indices. You can see it's holding its bottom a little bit. Might be a little bit of upside in the Dow, depending on. We'll talk about earnings as well as who's coming out with earnings and how they do. So the Dow's holding up a little bit better. All caps, the Russell IWM. Again, it seems to be holding up, holding that bottom a little bit better than the SPY and NASDAQ. Look at the VIX. Surprisingly, even with that extreme volatility on Thursday around the CPI, I don't think the VIX ever got above around 32. Maybe it hit 33, but we didn't get one of these, panic spikes, which is an indication that we were probably not a true capitulation, not a true bottom. So if I go back to the SPY again real quickly, we don't see the kind of capitulation wick down that we would, expect to see at a true bottom. So again, it's kind of doji. We got a wick down, maybe, but there's the high possibility that we're not at a true capitulation point yet. So, okay, we looked at the VIX. Again, we didn't really get that high volatility we're expecting. When we talk about futures, I'll talk a little more about how I'm trading the VIX. One of our favorite trades is to short the VIX on one of these spikes with SPXY. So again, I'll talk about that probably more tomorrow in more detail about how we're using SPXY to short the VIX on any spike. But you can see we're just not getting that spike in the VIX that would indicate a true capitulation, even though the fear gauge, if you look at the fear gauge, maybe we can look at that in a second. There's a link on our home page Under the links section, our homepage is beachbumtrading.com, bum without the U. It's got links to all our social media platforms, tools, and somewhere down here, here's the fear and greed index. We'll see if this guy will load up. So yeah, so as you can see, we're sitting at extreme fear, but we're not seeing the volatility. In fact, it was pointed out on Thursday while the CPI, while the SPY was declining, the VIX was actually declining. And again, that's another indication of that we're not at a true capitulation. So again, you can find this link and you can look at the fear and greed index in more detail. I won't go into detail here. It's showing extreme fear. So fear. And so that says we're in a bear market, right? But we're not seeing the volatility that would correspond to that level of extreme fear. And the question is why not? So yeah, SQQQ going to the moon. Well, it's definitely going up because SQQQ is the short on the NASDAQ. And so when you're playing a bear market, the SQQQ goes up when the NASDAQ goes down. We're talking about XLE. We'll look at energy, etc. in a minute, and particularly in the futures, all the different energy sectors. So let's go ahead and look at groups, industries, etc. So we see, everything was red on Friday. Again, we saw a sector rotation out of energy, basic materials. As you saw this week, we've been talking about this for weeks. They're rotating in and out of energy, basic materials. Both of those are somewhat sensitive to the strong dollar. So when we have dollar strength, it pushes them down. But again, there's a significant sector rotation in and out of energy. So it was down hard on Friday. It wouldn't surprise me if we saw cash flow back into it on early next week. It wouldn't be surprising at all. And then we'll see cash flow out of it. Again, the sector rotation is something you can make money with. For the week, consumer defensives, financials healthcare were the only relative positives. You can see energy is kind of in the middle. The worst were technology and consumer cyclical. And again, for the month, though, energy is the least negative. So real estate really got hammered. Again, here's an opportunity. They've been hammering real estate heavily for quite some time. We saw a little bit of a recovery this week, but we may see, cash flow into real estate, particularly if they discriminate against the non-mortgage-backed versus mortgage-backed real estate and REITs. And again, tomorrow we'll talk about some opportunities in those areas. So if I look at the detail of the industries, you can see, okay, so we saw some recovery in diversified real estate. What I was just talking about is the non-mortgage backed stuff. I think we'll have some positive opportunity. Airlines up a little bit. Banks, obviously, JP Mortgage, Wells Fargo were positive, so that held up. See, some of the REITs were holding up a little bit. At the bottom, we see aluminum, silver, uranium. We've been talking about aluminum as an opportunity. We've been talking about uranium as an opportunity. We saw, again, outflow of energy pushed all the oil and gas down. The strong dollar pushed gold, silver down, etc. So for the week, again, some of the real estate starting to perk up a little bit. Again, some of the worst, gold, silver, gold. Again, they really pummeled silver on Friday. And tomorrow, again, we'll talk about how we're playing a potential extreme downward move in silver. So again, I have a video and the links in this notes for the video that talks about how you can use this groups tab to drill down, find individual stocks, filter individual stocks, etc. See you guys talking in the chat. That's great. Glad to see you guys interacting, helping each other out. I see discussions of semiconductors. Yep. Well, probably tomorrow we'll talk more about how we're playing the semiconductors. Okay, so let's talk about the economic data we got last week. Monday, Tuesday was pretty boring. Everyone was pretty much waiting for the CPI data. Um, we got mortgages. You see mortgages still going up. This is on Wednesday. And we got the core PPI on Wednesday. It was bad. It's still hot. The producer price index, again, inflation's still hot. Came down a little bit, but month on month it was up above expectations, although we didn't get a strong reaction on Wednesday to that. Um, so again, a little surprising, but again, everyone was kind of waiting for the CPI data on Thursday. Thank you again to Solidago for posting this in our Discord that the White House was considering a ban on Russian aluminum. There was a little bit of a pop. We've been watching Alcoa, AA. There's also an ETF, I think it's JJU. We'll look at that again tomorrow. And there was a little bit of a pop in aluminum, but not a major one. And it's that they're considering a ban on Russia. And I saw some news articles also come out on Alcoa that they're trying to support that ban. They're trying to push that ban because obviously that would benefit them. So again, we're still watching Alcoa, and there may be an opportunity there. That's the one we like best, and the JJU ETF. So something to think about, and let's talk about it in our Discord and our Facebook group, etc. Is, we're already looking at aluminum, so that was just a bonus. But what else might the White House ban from Russia? And I have not dug into other exports from Russia that they make a significant amount of money on. But I think there's opportunities there because I think the government will probably be looking at those same things and say, where else is Russia making their money that we could potentially hurt them by banning or restricting or, sanctioning or whatever. So let's talk about that further. Maybe we'll talk about it further in game plans. If I have time, maybe I can dig into that deeper. But yeah, there's some opportunities there, I think. Also, we got the FOMC meetings on Wednesday. There really weren't any surprises. Again, these are just minutes from their last meeting. So it's just what did they say? And people were seeing if they said anything during the meeting that was different than their press conference, that would give more of an indication. And a couple of the quotes I picked off from the CNBC commentary of those minutes was inflation's unacceptably high. So again, their target is killing inflation, and they're seeing it's still high. It's not coming down, and it's unacceptable. So it's a very hawkish, very aggressive stance. They need to keep tightening even as labor market slows. So again, their priority is in killing inflation. They're not as worried about the labor market. As we'll see, the labor market's holding up, so they could be very hawkish, very aggressive. So that's what we're going to expect. And when we get to CPI data, I'll talk more about the hypothesis of what the upcoming rate hikes may be. So, and they said ongoing rate hike increases are appropriate. So they're going to keep hiking. They're not going to pause. I don't know why people keep, pricing in a pause or thinking they're going to pause. They're not going to pause till they get inflation down, and their target is 2%, and we're nowhere close to 2%. We're in the 9% of real inflation. So they say higher for longer, expect higher interest rates for longer, and we've been talking about this for a long time as well. In fact, almost most of the year we've been talking that interest rates were rising and how to make money trading in a rising interest rate environment. So this should not be a surprise. In fact, I commented several times on Wednesday and Thursday that, were people actually surprised that inflation's still high? Really? Why? So so Thursday we got jobless claims again. It was a little bit higher than expected, but again, you can see we're not seeing a dramatic slowdown in the job market. It's still resilient. So there's no reason for the Fed to currently fear that they're going to significantly damage the job market, given the data that we're seeing right now. It's coming, a little bit, but not anything significant. And then we got core CPI data. It just says inflation's still hot. It's not coming down, it's going up. So, and again, I don't know why anybody be surprised at that. Again, none of this is financial advice. These are all my opinions. We're not financial advisors. This is for education and entertainment purposes only. And again, everything in this video and any other of our videos is my opinion. So you take it for what it's worth. Everybody's got an opinion. I won't complete that phrase, but again, this is my opinion. But what I believe is I don't think inflation is going to come down until people have spent every penny they can get their hands on, and they had record savings. Credit card debt was down, record lows, etc. And people want to travel. They want to go out, have experiences given the reopening. We see travel, airline tickets are way up. So inflation on travel is very high. Hotels is high. Etc. And I don't expect inflation to abate until after the holidays. I don't think until next year. I think we're going to have high inflation because, again, I think people are going to spend every penny they can get their hands on until they max out their credit cards, and then they're going to go, oh, crud. And they're going to hold their hand out to the government and go, help us. We spent all our money, help us, which is not going to happen. So, again, my opinion. Hopefully, I'm not trying to offend anybody, but that's what I would bank on. So again, we saw initial jobless claims was a little high, but not significantly higher than expected. And we can talk about my opinions in the Discord. If you disagree, if you have other opinions, other thoughts, we can talk about it in the Facebook group, in the Discord, etc. So I always welcome that. You're not going to offend me. Don't worry about it. So, and we saw crude oil inventories came out, much higher than expected, but given the OPEC production reduction, that didn't really drive oil prices down initially. I'm finding, and I'm commenting to some people, that a lot of people are not paying attention to the oil inventory anymore. So it's just not really driving the price, even though this tells us supply is high, and we're going into recession, demand's down. So now on Friday, oil dropped down to 85, but again, a lot of that I just think is outflow from energy. We also got gasoline was down. So here's some of the articles that I pulled out right when they released the CPI data. So you can get to these articles. You just click on them in our document, and then you can read these articles for yourself. But you can see, inflation data. Inflation data is hot. And again, this is early. So we saw that initial plummet in all the indices and then a strong bounce back. And again, I'll talk about that more, I guess, when we get to the futures. Friday, we got retail sales, not bad. Again, people are still spending money, so they're going to keep spending money. I think the retailers are going to do fine through the end of the year, but watch out in January. So, in fact, if you want to buy stuff cheap, wait till January, because I think they bulked up their inventories, due to supply chain issues, etc. I think they're going to have excess inventory. I don't think it's going to all sell through. And if you want to get a deal, wait till January. I used to be a consultant to the retail industry, so I know how all that works. And they have to pay tax on their inventory in January, so that's when the great sales are. We saw the Michigan sentiment. It was improving, and that's kind of what we expect too. The expectations was down a little bit, but overall sentiment slightly improving. Again, it bottomed a couple months ago, and so it's been slightly improving, but the bottom was, severe. It was all-time low sentiment, and now it's just improving from an all-time low. So it's kind of what you would expect. inflation expectations are still high. You can see that's increasing. So the consumer is expecting inflation to continue to increase as well. So that's negative, but it's reality. Is inflation's going to keep going up as long as people keep be willing to spend all their money. So Tanbeer says the IMF is projecting increase in job loss, uh, and that would be expected that because we're in recession. Um, but again, I think a couple of weeks ago I talked about why I think the numbers that they're looking at and the net job loss is not significant yet. Although we're seeing tech, and in fact, Intel just laid off again people, and all the tech firms, et cetera, are laying off. But again, my opinion, I think the service firms, et cetera, who had shortage of people are still hiring. So the net is not decreasing significantly until we get in a real hard recession. I don't think the job unemployment numbers are going to spike up. Again, my opinion. So next week, we'll jump over to investing.com and look at the calendar in a second, but I just want to remind everybody that Friday the 21st is October options expiration. So the monthly options expire on Friday. So just take note of that. Again, every options expiration date, you can expect some tug of war around strike prices, increased volatility, etc. If you want to see the options expiration calendar, we have a link on our homepage. You can get to the official options expiration calendar. We also have a calendar that's linked in our Discord, etc., that shows our release schedule for our videos and also options expiration and like market holidays, etc. So hope that all helps. Okay, so let me get to the calendar for next week, see if I don't know of anything particularly interesting. The CPI data was the big economic data everyone was waiting for that they expected to drive the Fed. And just to further talk about the CPI data is after that came out, they said, 75 in November is almost a sure thing. Now, some people are talking about 100 points in November. I don't think they'll ever hike 100 unless they need to just shock the market. And I don't see that, but they're talking about 75 in November, 75 in December. I would fully expect that. Again, that's my opinion, but I expect 75 in November, 75 in December, and then we'll see. If inflation is not coming down, they're going to keep hiking at that rate, I would guess, going into next year, even though, people are going to it's going to cause a lot of pain. It's already causing a lot of pain, but they already said expect pain. They need to. Their goal is to get inflation down. So, and yes, CPI is a lagging indicator. There's a lot of issues with the way that data is collected. That is not reflecting, the real inflation that people actually experience. So. And thank you, Spacula, for reminding people to subscribe. If you're not already a member of our BeachBum trading community, we hope you will choose to subscribe to our YouTube channel. Please hit the bell icon to be notified when we release videos. We release videos throughout the week. We have these live streams on Saturday and Sunday to talk about our weekly trading game plans. And again, we have due diligence videos, educational videos, etc., that we release during the week. So hit the bell icon. Please hit the thumbs up on this video and our other videos. Our goal is to build a BeachBum trading community. I love the way I see our live chat. The participants in our live chat are growing. Our participants in our Discord are growing. Love to see that. And we'd like to invite all traders to come join us and let's work together to make money. You can find an invite to our Discord in the description box below. It's free to join. So come join us all in the Discord and let's help each other make money. So next week, the economic calendar. Again, nothing much. Mondays tend to be pretty light. Um, Industrial production, we're going to see recession. Housing market we know is in recession. Mortgage rates going up. Housing starts. Again, the housing market's already in a recession. The home builders have told us that. We get, oil and natural gas inventories on Wednesday, Thursday. But again, I notice people are not paying as much attention as they were previously to those inventory numbers. Doesn't seem to be impacting the price quite as much. Although right around that nat gas inventory number, there tends to be volatility, but it's not often what you would consider rational. In terms of sometimes the inventory goes up, so there's more supply and the price goes down, or the inventory goes down, less supply and the price goes up. So, or vice versa. Again, it's not always rational. Solidago Walter will tell you about that, right, Walter? And we've still got some Fed members speaking. Again, I don't expect anything different. They're going to reiterate what we've already heard. They need to keep hiking rates. They need to get inflation down. The job market is resilient. They don't need to worry about it too much. So again, I don't expect anything different. Yeah, I agree, Walter. It's often somewhat irrational, and it's more the position of the traders than the data. But then it tends to adjust and become more rational given some time. But it's opportunity to make money, right, Walter? If you're nimble and you watch the price action, natural gas tends to move pretty rapidly, and it's got a good range. So there's some good opportunity to make money. So. Yeah, I see your comment, Tanvir, about interest rates increasing, cost to borrow, do business. Actually, I don't think that's really it. It's more input costs, cost of labor, etc. Companies are, in fact, banks are not really lending that much. Um, and we can talk about that more. Is they're making good money just because of the Fed interest rate increase, and we're not seeing a lot of lending, and people aren't asking to get loans, including businesses. They're not borrowing. So I don't think right now, I don't think that's the case, that the interest rate is contributing significantly to inflation. I think it's input costs, labor costs, et cetera. And I think you're going to hear more focus on labor costs. In fact, the Fed's very concerned about um, what they call a wage price spiral. And that's with increasing wages, then inflation goes up. And so people then demand more money because of inflation. So again, my opinion. So let's look at the futures. Quick flip to crypto just to see. You see Ethereum's down to 1,200, Bitcoin's down under 2. So the theory that cryptocurrencies and inflation hedge hasn't really held up. You'll hear people talk about that. Crypto winners still here. I also like to see that as more of a gauge on, risk off. Is when we see a risk off, the crypto really gets hit. If it's risk on and the growth tech and stuff's running, then the cryptos go up, right? Get it. Okay, so here's the futures for the indices. We see, there's the Thursday spike and then the Friday drop. We can see the Dow, it didn't retrace all the way. The body of the S&P, pretty much retraced, so it's pretty much sitting at where it was before, but it didn't wick down to its low. Same way with the NASDAQ, because it still got, it didn't make a new low on Friday yet. Same way with Russell. So, there's definitely a bear market, definitely on a downward trend. And the question is, are we going to make a new lower low? And my guess is yes, we're in a downtrend. So we can expect lower lows, lower highs. You can see it very clearly. We're making lower lows and lower highs. We're in a bear market, downtrending market. So that's what we should expect. We see we didn't really get a new high in the VIX, but it's still sitting in the low 30s. But it's trending down right now, and we don't really have any catalysts that would drive the VIX after the CPI data until we get to the FOMC meeting. So unless something happens, the expectation would be that the VIX would retrace and go down, right? Now, if you want to play that shorter term, again, you can short the VIX using SVXY. You can long the VIX using UVXY. See oil, it peaked up over in the 93s earlier on the OPEC production cut, and now it's dropped back down to 85. We can see a bottom, below 80. So, again, unless something changes, it looks like it's headed back down. So we'll talk about tomorrow, how we're playing that retracement in oil. Same thing with natural gas. See the previous spike back to 9, 10. I see it peaked up above 7 briefly, and now it's sitting in the mid 6s. So it looks, pretty flat there, but recently the overall longer term trend has been down. And we see gold, has been dropping, dropped real severely, gold, silver, etc. Dropped severely on Friday due to the strong dollar, palladium. Again, tomorrow we'll talk about, you see that how severe that drop in silver was. We see an opportunity there. It's nearing its 52-week bottom, and you see it's got nice range. I think there's a nice opportunity there. So we'll talk about how we're gonna play that tomorrow. Copper's pretty flat. You guys probably heard about the production issue in Florida with orange juice. Unfortunately, I don't have a way. There's only one ETF I know of to play orange juice, and it's long only. And you can see it's already high, but there's a production shortage in orange juice in Florida right now. So if you're gonna get oranges for the holidays or something, get them soon, and then you're probably gonna have to pay significantly more. So then we see the bonds, they keep going down because the yields keep going up. Again, if the Fed's going to go up to, they were talking 425. Now there's the possibility of even higher. So the yields on the bonds is going up. They're all sitting around 4%. And if they keep raising, then the bond yields have to go higher. So the prices go lower. So the bonds keep dropping. So, and that's, until they stop raising rates, and the bonds can stabilize, that we would expect that trend downward. So we see the dollar, it has peaked around over 114. Now it's sitting around 113 as we speak. Let me see what I can see what the dollar index is showing right now. Let's see. Oh, I can't see it there. Oh, yeah, 113 something. So right now that's where it's sitting. 113.17. So, but again, it looks, it's not making a strong move either way, right this second. So you see the euro dropped and then stabilized. The British pound bounced, and they've got issues. They're trying to stabilize their market, their economy. And you see, so several of the other currencies are just really dumping. So if you're into Forexers, I'm sure there's some good opportunities. I can't directly trade Forex right now, so. Okay, so given all of that, actually, let me look at the market screen on Webull, and then we'll talk about strategies. And Walter says, I wish there's an ETF on OJ. Yeah, there is one to long OJ, but there's none to short OJ. I was looking for one the last time it spiked, and there isn't an ETF to short orange juice. And thank you, Spacula, for pointing that out. So we have a Patreon group, and we do have alerts on trades, etc. Also, when we sometimes we pre-release videos to our Patreons before they're released to the public. So thank you. If you'd like to support our efforts, we would greatly appreciate it. You can join our Patreon. Again, get alerts, our watch list, our daily watch list, etc. And I'll talk about that more tomorrow. But thank you for reminding people, Spacula. So if we look at the market screen on Webull real quickly, we see the histogram. This is for Friday. So we saw a majority of decliners, almost 4-1. Most of the declines were relatively small, just a small number of advancers, probably the financials, JPM, Wells Fargo. Outflows, as kind of expected, was mostly NASDAQ. Dow held up a little bit better, or New York Stock Exchange held up a little bit better, but generally outflow down. Just a reminder, as we are headed into earnings season, we had, the financials late last week. It is getting heavier. A couple places you can see the earnings calendar. The very near term is here on the market screen in Webull. And it'll show you, who's coming up, if it's before market open or after market close. Another place is in investing.com. On that same calendar screen, you can flip over to the earnings and you can see, okay, Monday we got Bank of America. Okay, so more financials. So the XLF popped on JP Morgan's positive earnings. And then we could see, who else is reporting what sector. Goldman Sachs, so more financials. Got some transports. So again, you can keep an eye on who's reporting, what segments are they in, how are they related to stocks you own that you might want to buy, etc. If you want to wait till someone releases earnings to make a decision, etc. So here's the full earnings calendar, and again, here's the short-term earnings calendar in Webull. Just another quick reminder, if you're not already using Webull, they're still offering the 12 free stocks deal. And it's the highest free stock deal I've seen them offer. Webull's our favorite trading platform. As you can see, we use it both for analysis, due diligence, and most of our trading. And all you have to do is open an account. You get 2 free stocks, up to $300 each. Put in any amount, even $1, and you get 4 to 10 more free stocks, up to $3,000 each. So again, if you're not using Webull, why not take advantage, get 12 free stocks. You can cash them out if you don't want to use the platform, but it is our favorite trading platform. So, and you can find the link in the description box below, on our website, on our About page, etc. Just trying to watch the chat a little bit. You guys are talking about an ETF with options. Yes, some ETFs have options. Okay, you guys are talking about futures. Yep. Okay. And yes, a lot of the ETFs, it's good to understand. We'll talk about this again more tomorrow, but a lot of the ETFs are actually based on various futures, is how they generate their returns. So if we look at the industries for the week, we see transports, education, they're kind of mixed. Packaging, so a lot of things for the week were just kind of 50-50 mixed. Beverages, diversified. So for the week, not too bad, pretty mixed. We look at the ETFs. Again, I expect them to show down. Yeah, there's SQQQ down on the Russell, down on small caps. up on volatility. So they're betting more up on volatility right now. There's UVXY and BXX are both up on volatility. Down on the Dow, SDow, SPXS, bear, SPXU, short. So down on the S&P, down on the Russell. So yeah, it's right now it's bearish, betting down. Higher volatility is what the current bet is. Industries pretty much all red. Maybe financials will have a little green. Yeah, a little bit. And commodities, so livestock, ETF is cow. If you want a long livestock, there's a couple of sugars, platinum, so platinum long. Softs, so again, some of the commodities, so softs is down, so down on cotton, etc. Inflation, so inflation expectations, betting that's increasing. Short-term bonds. So again, we'll talk about bonds are now an alternative to stocks. So again, they're paying 4% plus. So again, it's no longer true. We got to say goodbye to Tina because now there's alternatives to stocks, and these bonds, the short duration bonds, is one of the alternatives to stocks. Is now you can get a pretty much risk-free return of 4%, around 4%, and some of the shorter term bonds, are paying above 4% at no risk. So again, if you're going to take risk in a stock, you have to have a reasonable expectation that it's going to pay you more than 4% for the time frame, for the same time frame. Because an alternative is I could just buy the bonds, and I have almost zero risk if we're talking about U.S. Treasuries, and I get my 4%. So again, as we're picking stocks, and we'll talk about this again tomorrow in terms of our shopping list, what's on our watch list, etc., is that's how people are thinking now, especially your institutional investors, your fund managers, etc., what they call the smart money. They want the lowest risk, highest return on their cash. And if you can get 4% at essentially zero risk, then if you want me to invest in some other stock, you have to convince me I'm going to get a higher than 4% return at a reasonable risk. So again, these growth stocks that are unprofitable may not be profitable for years. They're high risk, and what's the return? In the next year, 5 years, is it going to be better than 4% guaranteed per year? If not, who's going to put their cash in that stock? And if you have no buyers, then price can go down, right? So that's why it's important to understand that, goodbye, Tina. Now there are alternatives. There are real or reasonable. Reasonable. I'm going to spell it wrong. There are reasonable alternatives. Treasuries are one of them. And yeah, Tanvir, the price is going down because the yields have to keep going up to match the Fed rate, and that's why banks are not lending, because they could get, right now they're getting 2.5 or 3.25 from the Fed, but they're expected to go up to 4. So if the bank can get 4% from the Fed, then why loan out at 4% or whatever? Now, any adjustable rate loans, as soon as the Fed hikes, they're sending out, the new interest rate is X, and it goes up, 75 basis points. So they're making good money there. But the new loans, and that's why the financials, everyone had poured money in the financials expecting interest rates to go up, and then they didn't perform all that well because they weren't loaning out money, taking advantage of the difference in the short-term and long-term interest rates. So yeah, I expect, we're in TMF, which is the same thing. It's on 20 plus year treasuries, and it keeps going down, price going down because yields going up, and that's going to keep happening until the Fed stabilizes interest rates and quits hiking. So that may be, a while. So next year, right? So we talked also last week that, I bonds are inflation adjusted bonds. You can buy through treasurydirect.com. I believe I put a link to that on our website. You can check for it. I'm pretty sure I put that in there. Probably put it in our Discord as well. You can buy again, get a 9% or better. It's adjusted for inflation on a limited amount of money. There's a $10,000 cap on how much a given tax entity can put into I bonds, but you get a guaranteed 9% return right now. So again, you see increased interest in that. People are putting money in that instead of stocks because you get a guaranteed 9% return. Now there's limitations on that. You can't cash it out without penalty, etc. So also bond ETFs, and we'll talk in fixed income ETFs, and we'll look at OPP tomorrow. But again, these ETFs are based on bonds and their returns. They're cycling out of their previous bonds, letting those expire. They're buying the short duration, higher yield bonds, and so they hopefully will improve their returns. So again, you're seeing increased interest in bonds, bond ETFs, corporate bonds, etc., because they're now yielding more than they used to be, which was near 0 or 2%. So again, you're hearing a lot more interest, seeing a lot more cash flow into bonds, into fixed income, and away from stocks. So the supply of cash flowing into stocks is decreasing. So again, your buyers is decreasing. Plus, people that got blown up in the bear market, they're gone, right? So there's a lot of cash flow that is going somewhere else and or has left the market. You also hear people talking a lot more about buying real estate. Now the prices are high, but everyone's expecting a real estate crash as the mortgage rates, skyrocket. And the buyers are gone. They don't want a mortgage, can't get a mortgage. They lose their job, etc. Real estate prices will come down, and I know there are people sitting on cash waiting for the opportunity to buy real estate cheap, etc. So Flippa asks, do I know any ETFs with science and technology? And yes, Flippa, and we have a spreadsheet. I don't know if you've seen it before. Hopefully you have. Tomorrow we'll look through our ETF spreadsheet in detail, and please remind me again of specific categories you want to look at because they're not only general science and technology, but also specific categories. And then we can look at those and look at their risk-reward profile in detail. So, for example, if we want to talk about biotechnology, there's LabU, which is LABU, which is long on biotechnology. There's LabD, which is short on biotechnology. We've also got others on, the NASDAQ, etc. So we'll look at those tomorrow. So please come back tomorrow and remind me and point out specific ones you want to look at. So again, there are, goodbye, Tina, because now there are reasonable alternatives. Here's some. We've talked about these. Hopefully we'll have the opportunity to dig in more detail, strategize. But again, so we're looking at, some of these areas of alternatives, treasuries, bonds, bond ETFs, real estate. How can we take advantage of the fact that money's flowing out of stocks and into these alternative areas? So also we talked about, if I can get a better than 4%, so treasuries are paying 4%. If I can get a dividend of more than 4%, then it's reasonable if the risk of price depreciation is not high. So some of these REITs like Realty Income, which we own, Stag, LTC we like, these are non-mortgage-backed REITs. They pay more than 4%. So again, that's a better return than the treasury. So then we've got ETNs like GLDI on gold, SOVO on silver, USOI on oil, pay very high monthly dividends in the teens to 20s of yield. So again, there's risk with price depreciation based on these commodities, etc., but traded a good way. I'm trying to resist saying the right way. you can make money both from the dividends as well as in price appreciation. And again, tomorrow we will talk about how we're using a number of these ETNs to generate income while we're waiting for the markets to turn around. So I left these links from some of our previous discussions just for reference. Again, while we wait for the markets to turn around, we talked about these for several weeks. Again, these are ways we can just make money in the current market. So, we can scalp volatility. We talked about that. We can scalp the commodities. Here's some examples. And again, we'll look at individual ones again tomorrow, scalping the indices. If you guys are nimble and you caught that bounce in the indices after the CPI data, after it dumped and then bounced, hopefully you made a lot of money because it really bounced hard and then peaked out pretty quickly. Again, you have to be nimble. More nimble than I am. I did not catch those bounces, and I don't like to chase, and so I didn't chase it. So, but I could see, I could see the opportunity there. If you're quick, day trader, momentum trader, breakout trader, there was some good money to be made, and then you could flip it over on Friday and play the inverses and make money coming down. So again, there's ways to make money in any market. And that's a message we want to leave everybody with, and hopefully you will share that message. If you know somebody looking for how to make money in the current market or in any market, tell them to come join us. Come subscribe to our channel. Come join us in the Discord, and let's help each other out. So another thing before I wrap. Is tomorrow I'll talk in more detail about how we're focusing more on selling covered calls against our existing positions to generate income, and I'll show you a number of examples and talk about how we're using this method to generate more income, again, while we wait for the markets to turn around. So if anyone has any last minute questions, please throw it back in the chat. I apologize if I missed your question earlier. You can always also contact us via the Discord. Hit us up, just add us in the Discord, and we have a number of channels, different trading strategies, etc. I post the economic data, as you can see. I forgot to highlight this earlier. I post it in the Surf the Markets channel as it comes out, etc. We have discussions. The main discussion channel is the Beach Party, but again, we have others focused on various tools, trading methodologies, platforms, etc., styles of trading, etc. So it's free to join. Invites in the description box below. And come join us and ask a question. Could you please look into PBR? Yes, I do have on my list to do a due diligence on Petrobras. I believe that's what PBR is, right? It's a Brazilian oil company. And yes, I do have that on my list to do a due diligence on. Let me make sure I get that down for you so I can reference that you're the one asking for that. I guess they just did their election. I don't remember what or it's upcoming. I heard discussion of that, so I will look into that, and I'll let you know when that due diligence video is available, Tanvir. Thank you for reminding me. Thank you all for joining us. Great to see you all helping each other out. Hope to see you in the Discord, helping each other out as well. If you have other individual stocks you want me to look at for our part 2 of our game plan tomorrow, again, you can post a question or post a tag in the Discord, and I will try my best to take a look at that either before or during our part 2 of our weekly trading game plan tomorrow. So have a great rest of your Saturday, and again, we'll look forward to seeing you in the Discord. Thank you for joining us, and have a great day. Bye.